Live.
Live. All right. Hey, welcome everybody.
From your room, it's Dumb Investing.
I'm Lloyd.
I'm Harry.
And it's about to get dumb up in here. So we tried an experiment last night, and we had some comments that said, hey, y'all sit around and BS way too much. Break your shows down. Go to the old daily show. Let's talk about investing. And then go waste your time talking about other crap. We can get to the business. Well, it's a lot of work for two guys who work full-time jobs by the time they get home and do this stuff. So we're going to try to consolidate. We're going to talk real fast and get it all done in about 20 minutes.
And if we're longer than that, just watch us on twice the speed on YouTube. You can do that. We're just not live. If you want to watch us live, I think that's a lot more fun. You get a lot more enjoyment out of it. And we love having you comment on what we got going on and answering some of your questions. And, you know, when you're live and we take half an hour and you guys got questions and we're answering them back and forth, I think that's the best part. But if nobody's live, if there's no comments, then we will try and get the show done about 20, 22 minutes. And if that's too long for you, watch us on 2X when it comes onto YouTube.
And for those of you just joining us, welcome to the Dumbest Investing Channel, all YouTubes. All right, on to our portfolio. Then we'll talk about what we used to do. That's how we're going to do it. We're going to get this done in 20 minutes.
Super speed.
It's going to be awesome. Oh, my red, just like my personal one. Isn't that wonderful?
Yes, sir. Yeah.
So the market today, people are saying they're a little leery. Maybe some of the home builders might be slowing down. And so there was not a whole lot of catalysts moving the market forward today, is what the suits were saying.
Sure.
So let me guess, BurgerFi and Socket.
BurgerFi does lead the way on the downside.
Oh, BurgerFi.
That's right. About 4%.
How far down are we on them? Are we like 35% now?
Oh, boy. Yeah. Let's see here. 1582 we're in at.
15 to 10.
So yeah, I'd say it's like 33%.
33, yeah.
Boom.
But that's okay. That's a conviction long-term play there.
If you say so.
Oh,
they are up after hours. I did see that. So that was good news.
Well, they haven't started rocking on that award yet and getting people into their show.
Yeah, and it's going to take a little bit of time for the new C-suite to get their teeth in everything, get everything fixed up and all pretty in the restaurants. You'll be licking off their floors, and it'll be fantastic.
Exactly. We get there
off the charts.
Rock and rolling.
And when the economy opens back up too, I mean, they are a relatively small company. I think their quarterly revenue was like $30 million. So, and that's at like 30 locations, something like that. But
no, it's got to be more locations. It's got to be like 300, right?
Maybe it was 120 locations. Does that make sense? Yeah, no, $11 million. Sorry, they did $11 million.
Okay, that makes more sense.
Yeah.
But ready, red. All right. So who are our green ones? What do we got going on down there?
Well, not a lot, really. Our Chinese education group was up 0.5%, and this, I don't even know what this is. Uphold CM KNG ETF. It was up 0.49%.
I don't remember that one either.
I don't know either.
Well, it's up.
Oh, that's Kings.
We're still
Kings. KNGS. Kings.
Okay.
So we did buy that one. Yep. I mean, we did buy all of these, so.
We did.
So overall, obviously, we're going to be down today. But for the week, we are still positive.
All right, green for the week.
I think this little slowdown in the market here is going to start building some momentum. I think there's a big backlog of cash that's going to be coming in, and it's going to be. I think we're going to see the momentum start to shift here. I feel like the bottoms are near.
I don't remember who was talking, but one of the talking heads on Bloomberg was talking about how many trillions upon trillions both corporations are sitting on cash and individuals are sitting on cash. And we're all just waiting to break loose, right? We all got to go to Dillard's and buy some pants because nobody wears pants anymore, right?
Right.
and start going out to BurgerFi with your friends and stuff like that.
And when does the free money end in the U.S.?
Well, I think the right answer to that is that depends. See, in Texas, our governor is putting an end to that, I believe, in June.
Yeah, and I heard something about that in Florida as well.
Yeah. So right now, the 9 to 5 that I have, we do some dealing with trucking. We truck goods in. We are a manufacturer, and then we truck goods out. And one of the brokers that is a good friend of mine, we talk personally as well as business. And we were talking about he's a guitar player in a heavy metal band, right? And so we were just chit-chatting, and he said that he has approximately 100 loads per truck. And he says that he is running what trucks he has as much as he possibly can, that there are...
So for every truck he has running right now, there's 100 loads that he could haul.
There's 100 loads that he can haul. And he said that these guys, because he's a broker, he does own some trucks, but then he also does brokering for other people. And he says that guys will accept the load. They will be on the loading dock, and they'll get an opportunity to make more money somewhere else, and they pull away right from the loading docks and just skedaddle to make an extra, whatever, 100, 200, $300. He said it's just the craziest thing you've ever had to deal with right now. So
yeah, trucking's tight up here too, and depending on what happens with that Line 5 oil pipeline that runs from Alberta through to Ontario, but it happens to go through Michigan, and Michigan ain't so happy about that pipeline going through Michigan, so they want it shut down, like completely, turn the tap off. So if they were to do that, that means that all that oil and all of that gas, or whatever it is that it transports, it's petroleum, some sort, I think it's oil, maybe it's gas, that would all have to get absorbed by rail and truck out of Western Canada to go across to Eastern Canada, which would be impossible. So there'd be a lot of trucks. Like, trucking would be an extremely short supply.
That's crazy.
It is crazy.
Hey, do you have our portfolio handy?
Yeah.
Where are we sitting? Do we have any winners that are getting up towards that 10, 12%?
Well, let's pop on over here and see if I can make this bigger for you guys. Can I zoom in? I can't.
I don't think we can do that.
I don't know. I'll see if there's a way that I can make that bigger so that we can actually see. So right now we are looking at Gates Industrial is the next closest. We are at 7.6%.
Okay.
And then Credit Suisse is at 6%. So not too bad. Down here we do have, if we want to just talk about these quickly, since these are going to be our long-term holds, our high conviction plays, because they're forced to be. Socket Mobile is down 36%, and BurgerFi is down, like we said, 29.84%.
So BurgerFi, I think, is going to come back. That's what my gut tells me. Socket Mobile, dude, roll the dice. I got no idea.
I'm going to do some research on Socket Mobile.
Give us some comments down below. What would you all do if you were sitting on some turds like that? Would you just flush them, or would you let them just sit around? We need to know. Because in my personal life, I have a problem when my stocks are red, that I hate locking in losses. And I know, I have counseling sessions with other people, and they tell me, well, the opportunity cost, you've got to start doing the math on the opportunity cost. If you had taken that money 4 months ago and stuck it into a 3% yield ETF, where would you be today? It's like, oh yeah, but dude, I haven't lost any money yet. They're like, yeah, but you're not making any money, you dummy.
Yeah, that's an interesting psychology thing for everyone to learn, right? Yes, the grass could be greener on the other side. It could be, but you're just as likely. I mean, we're rolling random dice here, so we're just as likely to pick another one to drop 30%.
Exactly.
So,
Wouldn't
it's
that be awesome? Every one of them lost 30%. We're broke. Yay.
no, we're not broke. We haven't sold them yet.
I know. Technically, the only ones we've sold, we've made 12%. So we are 12% yield group right now.
And we are crushing it. How good is
Crushing
that?
it. Totally beating the street. That's the title today. Dumb investing beats the street.
Beats the
Oh,
street.
yeah.
Good deal.
All right. Real fast. We're halfway through. We're at 10-minute mark. Do we need to talk about any real estate? I have a story to tell on real estate.
I don't think I have anything to tell, so you go right ahead.
All right. So you guys remember me talking about the house I found. Fell in love with it. Walked through it. It did need some renovation. It needed full interior paint because it was thrashed. And we had, 12 hours to look at it and 18 hours to put an offer in. There were 16 offers. When they reviewed the offers, we were number 5 of 16. And some of the things that they are dealing with, what the listing agent told us, he's a prominent listing agent in that region, that area, those few neighborhoods I was looking at that I really liked. And he said that first and foremost, he says half of the offers are people who haven't even seen the house. They are out of state or corporate buyers. And I said, really, corporate buyers? Tell me a little bit more about that.
Okay.
And should we use names of companies and stuff? I don't see what could happen, right?
Well, there's only 12 people that watch the show, so.
Yeah, I'll continue. So BlackRock is iShares people's, right? And they have bought somewhere in the neighborhood, what I'm being told, this could all be rumored, 8,000 homes in the Metroplex. And they are looking at least at doubling or tripling that. And so they have their agents that are out looking and buying these houses. And they happen to be looking for the stuff that I'm looking for, which is like
right.
turnkey. I'm not sure they would have bought this one because it does need interior paint. And from what we were being told is that they are looking for turnkey houses that they just flip onto the rental market.
Smart money. Follow smart money, hey?
I guess.
Well, so there's a bit of a challenge with this, right? So what's their end game? Their end game is to rent these out?
Yes.
Okay, so they buy a whole bunch of rentals. They're artificially decreasing the amount of inventory on the market, would you say?
Absolutely.
So what happens when these companies either don't get renters, which they will in the short term, but long term, they may not. At some point, there's going to be a glut of this, and they're gonna do what all investments do, and they're just going to liquidate. And when they liquidate, that's just going to put a whole bunch of extra inventory on the market, and that's going to plummet pricing. I'm not saying that's going to happen within the next 6 months or the next 3 to 5 years, but at some point along the way, they're going to be dumping these houses, and probably they're going to dump them right before shit goes sideways, right? So it's going to be when the hot water tanks are about to go, or the roof is going to need to be replaced. So they're going to be dumping them at what, year 12?
Probably. Yep.
Probably. So, I mean, that's when things kind of start going sideways on you, and they're 4 years old. So
or knowing them, they would create a different RET that has to do with the remodeling and renovation, and they would go through and rebuild those houses. And I don't know.
Yeah, sure. That's entirely possible as well. But I just, and maybe it just feels like there's a lot of, what's the word, FUD in the market that we can use. Like we're getting to the point where it's starting to feel unrealistic. At least that's the way I'm feeling about our housing market, where it's things. I think people are starting to say enough's enough, F it. And we're good with where we're at. And, up in Canada, there is new mortgage rules that come into effect June 1st. So the qualification rules all change June 1st. So that could be a big push why in Canada, we're seeing a lot of the same thing that we are doing in the US, a lot of panic buying, people trying to get in before and approved there before the June 1st deadline.
Right. So are they tightening the restrictions basically?
Yeah. Mm-hmm.
So see, that's going to drive the rental market up
For
because you're going
sure.
to have people who can't get into houses.
Right, but really the home builders are the ones that are crazy right now, right? Like they're panic buying everything, from like everything. They're trying to rush everything through and get materials and get delivery. So this I think this is probably a pretty good catalyst for the market to soften a little bit. There's going to be a lot less people that are going to be qualified. So
Quite possibly.
it's going to be interesting.
I know for us, we've got such positive population coming in. It's just insane. The guy was telling
in
us
your
that,
neck of the woods for sure.
yeah, that on rental houses, it's a 10-1 right now. That there are 10 applicants for every house, or 10 people that want to be there. Houses in our city overpriced by 8 to 11%, some as high as 15%. Overpriced compared to ? Right?
That's just your opinion.
I mean, it's hard to determine what overpriced is, right? When you think about our grandparents and them looking at the houses that we bought, they think they were overpriced 15 years ago, right? They're just like, well, back in my day, we paid $14 a foot.
Right, for sure. But the market has certainly moved up, and I think that's what she's alluding to, is that housing prices have probably moved up 8 to 11% over the last quarter, I'd say, over the last 3 months, and certainly 15%.
Well, and it's been such a swift move that a lot of people are afraid, on the other side, that, hey, these are overvalued. They're going to come back down because the ramp was just so steep.
Absolutely. Yeah, there's certainly the potential that at this point, I would say, unless you need a house, just wait, because there's going to be a backside of this. And, what's Warren Buffett saying? Be greedy when people are fearful, and be fearful when people are greedy. So that's kind of along the lines of, when everybody's buying, don't buy. Yeah. When everybody's selling, that's when you buy.
Yeah.
So that's kind of like buying the dip, sell at the top, buy the dip, all those kinds of fun names.
But what's crazy is people have been saying that, like, the market in California every year, it's at its peak. Now's the wrong time. It's at its peak, and those guys are still buying 2-bedroom bungalows for $700,000.
Sure. I don't think the market in California can dictate the rest of the goings on in your neck of the woods or our neck of the woods. It's completely different. That's the only place in the world or in the United States that has a semi-tropical climate that you can get, but you also have to deal with the crazy amounts of forest fires every year that seem to be getting worse and worse, and crazy high taxes.
Well, that's because they don't rake their forests. Come on.
Okay, Trump. I'll just go in with a pitchfork and go grab the stuff at the bottom of the forest of the trees. That'll fix everything.
I'm sorry. There's a lot of political stuff in the background we could talk about, but we're gonna try to keep this on investing.
Yeah, we try to keep it political free for sure. But yeah.
So what do I do? Do I keep looking for houses? Do I battle BlackRock? Take them on.
You want to know what I think you should do?
I'm not doing that. I already know what you're going to say. Go find the worst house in the neighborhood. I already know.
Go find yourself a deal.
I don't have subs, dude. I don't know people.
You got a realtor that's got connections. Do it.
I'm not ready for that task yet.
Why? Your home equity line, you could probably pay, $40,000 instead of $70,000. You got $30,000 in renos, and you get the home equity of the new house. Go refinance that and go buy another one.
We'll see how a few of these see how many I lose before we start looking at those. Because, man, I'm 6 months on a freaking pool, and I'm not even doing anything except looking at it. I'm not managing the subs or doing nothing.
Yeah, but that's okay.
I couldn't imagine trying to get a drywaller and stuff here right now.
Yeah. I don't know.
Because just like you said, all these builders are going hog wild trying to get as many houses out as they can. There's not drywallers looking for work right now.
Well, what's it going to be like in 6 months?
I don't know.
It's going to be either
guessing,
crazy worse or crazy better.
I think it's going to be the same.
Oh.
So we're down to like 1.2 months supply of houses. And the guy in the news was saying it's going to take us 6 years to recover until we get like a 5 or 6 month supply, which is normal.
Sure. I guess
some analyst was saying that.
Yeah, I can believe that, but the supply constraints are going to limit the amount of housing, and so is the labor.
That's why we're going to go to Redline and just stay there for 5 years.
Maybe if we're at Redline. Yeah.
So who knows? So we're still looking.
Cool.
See what happens on the next
couple. Deal.
Well,
just find a deal. It doesn't have to be old. Doesn't have to be a fixer upper. Just make sure it's below market.
Dude, there's nothing below market. It's just crazy. I mean,
that's crazy talk. There's always something below market.
Well, it violates my rules of I wouldn't want to live there. So
maybe not.
That probably is.
These are the ones where you get your realtor that has a private deal that they're showing and be like, oh, okay, you want to get out, or it's somebody's got to move, or somebody's liquidating something, or whatever, right?
Yeah.
It's just you need. It's just going to take time.
Yeah. Well, there's a lot of crazy guys. Like every stoplight you come to, there's like 4 signs stuck in the mud.
I'll buy your house. Hey, I got one of those in the mail the other day.
I went the
other day. Hey, I'm buying. It looks like it's a handwritten note. Hey,
right.
Hey, my name's Jamal, and I'm buying houses in your area. If you want to look to sell your house, give me a shout. Like, no. That's what I would do.
Yeah.
All right.
Cool beans.
We did it. 22.
That's pretty good. We'll try to do that from now on. Feedback in the comments. Let us know if we're doing all right.
Don't forget to click the link for Webull if you're in the U.S.
For link. Sure. Yeah, we forgot all about that.
No, we didn't. We did good. So, click the link, sign up, get yourself 2 free stocks up to $1,650 or $1,800 per stock, one of the two.
Yeah, whatever Facebook and Microsoft are right now. Those are some of the ones they're giving away.
Yeah, that's crazy. So do that. Also, don't forget to subscribe, hit the like buttons, follow us on Twitter at Dumb Investing, or new on Instagram at Dumb_investing. Nailed it.
Woo! Don't trade like that guy.
Or that guy.
Have a good night.
Good night.